Hi friends, welcome to one more video on the series Trading View Indicators, Strategies and Scripts. In this video, we are going to look at one supporting indicator for the VPA 5.0. This indicator is the relative strength indicator in TradingView for supporting the VPA 5.0 script. This indicator is called the RS for VPA. In this video, we look in details about this indicator. Many of you may have noticed that in TradingView, along with the volume indicators, I use three more indicators to support my analysis of the charts, analysis of the volume price action. Now these three indicators, one is the relative strength, the other is the money flow, and the third is the buy and sell pressure indicator. The buy and sell pressure indicator is already available for the public in TradingView. You can search and get that. So in this video, we will look in more details about the relative strength indicator, which is called the RS or VPA. The RS for VPA indicators has a zero line, and on the positive side it is shaded green, and the negative side it is shaded as red. It is when the relative strength is positive, it is green, and when the relative strength is negative, it is shown in red. Also, you can see there is a background color here. There is yellow and there is blue here. The yellow has got three shades here. You can see a light yellow, a medium color, and a much more darker yellow here. But the blue is just a single blue color here. Soon we will look at what are these colors indicating and what is this background indicating in overall. So let's go into the working of the formula of the indicator. First, a simple question would be, what is the relative strength? Is it the RSI? No, it is different from the standard RSI, which measures the strength of the individual stock itself. But here, the relative strength measures the strength of the stock against the index or the overall market, or whatever index you're choosing, or any other stock. It measures the strength of one stock to an index or any other stock here. And the formula is a very standard formula. I can say the stock gain divided by the index gain minus 1. And to elaborate on this further, the stock price divided by the stock price n period above, and the overall is divided by the index price divided by the index price n period above minus 1. And this will give us the relative strength number. When this number is positive, that means the stock is doing better than the index. When it is not doing well, it will be negative. So we can, from this indicator, we can understand how the stock is performing in relation to an index or another stock. There are two optional parameters provided with this indicator. One is to choose the index. You can choose any index or any stock, but the default is set to NSE 500, which represents the overall Indian market. But one is free to choose whatever index he wants. The second is to look at the look back period, or the period for calculation of the relative strength. Here it is by default set at 22, which is approximately a month's trading period. But one can choose their period what they want, but the default period seems to be working good on the daily time frame. But when you go into lower time frame, need to look at and evaluate which is the better period for calculation of the relative strength. Now let us just look at how to select the options here. Go to the indicator here, select the settings here. So here you can see the index for relative strength is CNX 500, which is the NSC 500. And the period is 22. This 22 is for the daily time frame, which is almost equal to a month's trading period. And to change the index, you just click here and you can change any indices you can choose, or you can go to any stock. You want to compare it with a stock, that also you can do here. So you can choose as you want. And you can also change the period for calculation of the relative strength here. The 22 works fine for the daily time frame. As you can see here, most of the upfront time is really captured here. You can see here the up periods are generally captured very well. But as you go down in the time frame, then one may have to choose a different time frame which will suit the RS calculations better. Now let us look at the background of the indicator. As we said before, there are two different shades, yellow and blue. And the yellow has got three different shades here, the light, medium one, and the little darker one. The background indicates the strength of the index itself. That is, the light shade indicates that the short term trend is up, and the medium trend is up when it is in the medium shade, and if it is a darker shade, the long term trend is up, or the strength of the index itself on a long term basis is good here. And the blue indicates the index is in the negative territory, or it is bearish here, the trend is down here. Of course, it does not differentiate between short, mid, or long term bearishness. It's only just indicates the index itself is in a bearish mode here. Ideally, the strength of the stock and the index, if they are both positive, then it is good. The probability of an up move is much higher. As you can see here, it is the index is doing well and the stock is also doing well. You can see here there's a good upward movement here. But when it is, sometimes you will see that the index is not doing well, but the stock is doing well, because it not necessarily mean that the stock is in an uptrend. It could be just that stock is not as bearish as the index itself. So one has to differentiate that. But this background really helps us to understand the stock strength much better compared to the index. Let's quickly see how the index strength is estimated. I have tried to keep it quite simple. In the short term, if the 5 EMA is greater than the 22 EMA, then it is the short term trend is up. And if the 22 EMA is greater than the 60 EMA, the medium trend is up. And the long term, is when the 60 EMA is greater than 120 EMA, then it is a long term. In simple terms, when the week EMA is greater than the month EMA, then it is in the short term up, and when the month EMA is greater than the quarter EMA, then it is the medium term is up. And when the quarter EMA is greater than the half yearly EMA, almost the half yearly EMA, then we say it is in the long term. Or the 6 months EMA, then we say it is in the long term uptrend. So I've tried to keep it as simple as possible. Now, we must notice one thing, that this is ideal for the daily time frames, because most of my trading is concentrated on the daily time frame, and that's why most of my indicators are also relate to the daily time frame. But I'm giving the option to change these depending on the time frame you want to use. If you're going in for a lower time frame, then you may have to adjust these short, medium, long term EMAs. So let's see how we can change this. Again, we go to the settings, indicator settings. You can see input style and visibility. And you can see here short MA for index, mid MA for index, and long term MA for index. The standard is 22, 60, and 130. This is ideally suitable for the daily time frames. But as you go down in your time frame, you may have to experiment with it and get the right numbers suitable for your trading. I hope you will find this indicator quite useful. I find it quite useful, and then it'll help you to better understand the movement of the stocks. We come to the end of this video, and the next video we will look in detail for the second supporting indicator, which is the money flow indicator. It is a standard money flow indicator with a little tweaking here and there. So we'll look into details in that next video. So if you had like this video and you want more notifications on the next video, please do subscribe to this channel, and thank you very much.